Practical accounting, the better way to learn.
Get into it and actually compute the cost of one racing teams. We're going to call this job 1, 2, 3, 4. I'm going to show you the key for the journal entries, the transactions, as well as the process for making the job cost record. But let's remember, we're using the base method. Here's a brief review of the base method: beginning inventory plus what you add, which in raw materials is purchases, minus what you subtract. And remember, we subtract it from the raw materials warehouse and it becomes direct materials. And then what's left is ending inventory. So it's beginning plus add minus subtract equals end. Work in process inventory works the same way. We add direct materials, direct labor, factory overhead, and transfer out our cost of goods manufactured to our finished goods, which works the same way. Key thing is here, it is when it is sold, it changes from a inventory asset to an expense at this point in time. So let's go take a look at these transactions over here on the right. The first transaction is we purchase steel for $15,000. Steel is a raw material, so that would add to our raw materials inventory, which is a debit, and we'd get a bill and record it as an accounts payable, which is a credit. So we begin over here on the right with beginning inventory of $30,000 plus $15,000 is our first transaction.
The second transaction is that we transfer $20,000 worth of carbon fiber and steel from the factory to work in process. So this is our raw material requisition. $20,000 is subtracted from work in process, that's your credit, and transferred to the factory, and where it's now called direct materials from now on. So that is your debit. It adds to work in process inventory.
The third transaction is our time ticket. We have direct labor of $1,000 times $30 an hour is $30,000 of time being spent on this job, making these two car bodies. So that would add to our work in process for this job. And remember, we're keeping track of it for this unique job, and this would be wages payable. Now, remember, this in the previous course, this would have been an expense, but now we're putting it in just the direct labor that we can identify as part of the cost of the jobs, which is going to become cost of goods sold later on. Now, here comes
This is an important issue in the chapter. Pay close attention. Allocation of factory overhead.
Factory overhead. We've computed and estimated that this is different than what we're paying our workers, that every hour they're going to work, they're going to incur $10 worth of supplies and utilities and all sorts of stuff like that, costs inside the factory, but it cannot be traced directly to the job. You wouldn't run out and check the electric meter every time you used a piece of machinery. So we're going to put this all in one bucket, and we're going to allocate or apply. Remember, we use those terms interchangeably. Apply factory overhead, manufacturing overhead, apply at $10 per direct labor hour. $10 times 1,000 hours is $10,000 added to the cost of inventory. And we're going to debit work in process inventory, just like we did before with direct labor and direct materials. We're going to credit this new account, factory or manufacturing overhead. This is a type of inventory account, but we're going to credit it when the actual expenses come in. We're going to debit the same account, but we're going to credit manufacturing overhead to transfer it into the cost of this job. The next one is we're going to transfer the entire job number 1, 2, 3, 4 out of the factory. It's done. Our 2 car bodies are done. So we're going to transfer them out of the factory. $60,000 is the total cost accumulated for these 2 jobs. It's 20 plus 30 plus 10. We're going to transfer them out of the factory into finished goods, and we call this our cost of goods manufactured. Notice this is different than cost of goods sold. Cost of goods manufactured, and we're going to put it in our finished goods warehouse and have it ready for sale. The final transaction is that we're going to deliver and sell one of the 2 car bodies to the customer before the end of the month. We'll deliver the next one next month. So our cost of goods sold expense goes up. That's your debit. Remember, this is an expense. And our finished inventory, goods inventory, goes down for half of the total cost of the job, half of the $60,000. And that is our final transaction. It is a reduction to finished goods inventory. So we have now our total inventory of 30,000 plus 35 plus 35. We began with 100,000 of inventory. As a result of these transactions, our ending inventory has grown to $125,000. So using the base method, you can clearly see the impact of the transactions on your inventory, and it works a lot better. Now let's briefly go on and take a quick look at the job order cost and margin record for Body Works custom car bodies. So this is for this custom job number 1, 2, 3, 4 for one racing team. Here's the one we delivered, and remember, this is the bridge method. We're always using the per unit as our first column. So our revenue is $50,000. That's how much we're selling it for. Our direct labor, direct materials, manufacturing or factory overhead, we total that off. Our gross profit, we made $20,000 on this one job, which is 40%. This is a key thing to know how to compute. This is the gross margin, which is 20,000 divided by 50,000. So this is the profit we make on the stuff we sell. And here it is for the total job. And this could be any number of a batch. It's just we have a batch of 2 in this process. Now, if you go get this file, you can work through this exact same transactions here and check it back to the key. Here's and fill it in over here and work through this by yourself for additional practice. And here is also in this file is a practice sheet for your job order cost records. And then remember that you have a different rate for factory overhead and direct labor. So good job on that.
Did you enjoy the video? I did. Gonna go back and watch it again just because I want to know what kind of cars they are. If you are doing well, did you take the quiz? If you didn't do well, go back and try it again. Practice makes perfect. If you did, you're doing fine. Let's keep going. Dr. Hiller's going to tell us more about job order costing, service.
You can get this Excel workbook and a whole lot more
stuff for free at practicalaccounting.com.
See you there.